Hi there, Robert Wolf here with Terra Firma Business and Financial Consultants. I'm an asset coach and a tax strategist. And if you like any of the information that you hear on this channel, please feel free to give us a thumbs up, add a comment, a suggestion, and some thoughts. That would be greatly appreciated. If you haven't subscribed to our channel, please feel free to hit the subscribe button, hit the little bell to where it's gray so you get updated videos and content as we periodically send out videos on it. Now, the key here is really our channel is about talking about what we consider the economic termites. So we want to talk about taxes, inflation, time, laws and regulations, and debt. And so these are the 5 things that we really try to focus on here, and how those things affect you as a business owner, a closely held business owner, small business owner. What's that mean to you? What's being said out there in the media, in the economy? And what's that rhetoric mean to me as a business owner? So we do our best to try to translate that to help understand what's being said and what's going on. So let's take a look at this next article. And this next article talks about the consumer price jumping, meaning inflation jumping 5.4, but core inflation rises less than expected. And so I think that's a little misleading. So let's talk about that. Before we dive into talking about this, we want to talk about the Federal Reserve. Their core inflation number, their goal for inflation number is 2%. Okay, so keep that in mind. So when we're talking about a price jump of 5.4, that's more than double, more than 2.5 times the goal of the Fed. Okay, so let's talk about certain key points that we're going to address in this 2-page article here. Prices that Americans pay for everyday goods accelerated in July. Okay, we're going to talk about we're not going to include energy and food in the CPI, in the Consumer Price Index, which is the CPI. But then we will talk about the core index as well. And so we'll chat a little bit about that, and then also a little bit about car prices and jobs, that sort of stuff. So it's kind of a broad range. So prices that Americans pay for everyday goods and services rose in July as pent-up demand for travel. Now, let's talk about rose in July, rose in June, May, April, March. Okay, so inflation is caused by what? Well, by multiple things, but at the end of the day, when you have so much money flowing into the economy, like the Fed has through the different Congress bills, the stimulus packages, you have pent-up demand when you have the economy shut down, people are closed, that they have to go buy things when they're finally the economy opens up. You have a lot of people not going to work. So you have people that are getting money from the government, they're not going to work, but they still spending that money into the system. And when that money goes in the system and there's not employees, workers to help support the supply chain, it causes that demand to increase prices. Okay, and so those are some key figures that we want to understand. They're going to use a lot of these numbers to base on August of 2008, when we had the financial crisis over 10 years ago, where we had a big issue with the economy, and so a lot of the stuff that they're talking about, the numbers they're talking about, are gauging back to then as well. Month over month, about a 0.5% increase to the CPI. Let's see, core inflation, which excludes energy and food. Okay, so two major areas that we need, right? But the core figure, so it rose by 0.3%, but the core figure, okay, rose by 4.3 over last year. Okay, so pretty significant. Which is a slight deceleration from June. Okay, so if you have inflation in June of 4, inflation July of 4, you see the progression going up, right? So they want to make you feel better that it didn't go up as much as the previous month. Okay, still, it went up, it went double of what the goal of the Fed is. Sharp deceleration in inflation in select areas of the economy had seen rapid price increases in the spring to help headline numbers in check. So, for example, used cars and trucks. Well, why is inflation climbing up to 10% to the prior month with used cars and trucks? Well, because you have a lot of new cars that aren't able to get computer chips from China, so you have a lot of cars that are assembled. They're sitting on lots, not at dealerships, but on the manufacturer lots. Then they're waiting for computer chips to allow that car to snap in. So if there's no new cars coming in the system, into the economy, into to people being able to buy, what happens when people need a cars? They have to go to used. Okay. Also, think about it from this standpoint. Let's use like rental cars as an example. We had to get a rental car, and one of the rental car companies was talking about how they're one of the largest, if not the largest, purchaser of new vehicles in the world. Okay, so when they buy new vehicles, what are they replacing? Existing vehicles. So those existing vehicles go where? Into the used cars. So it adds supply into the used car. So if that company can't buy new cars, they have to hold on to the used cars. So the supply of used cars to the system is less. So that means there's less cars, more demand, which causes inflation. Okay, so part of the issue of the shutdown is kind of detrimental when we're looking at some of the things that are occurring here. Federal Reserve has kept close eye on inflation. Yes, we know that. They keep using this word transitory. Well, they're using that because they're trying to explain away, you guys shut the world down. Okay, whether you believe the coronavirus was as severe as it is or was or gonna be, that I'm not talking about that. Data has shown the results of that. Okay, so we're not going to go into that conversation. The key here, though, is let's be real about what we did. Okay, we as everybody is we shut the entire system down. Okay, now we have our government giving money to people, allowing people not to have to pay for obligations that they're responsible for, and that affects the flow of capitalism. It affects the flow of cash flow, not just from individuals at home, but businesses, and those individuals at home work where? At those businesses. So we have a shift in supply and demand that's affecting every aspect of it. So the numbers are very difficult to grade and test because at the end of the day, yes, we have demand, but is that a shrinking because of the supply, or is we have a lot of supply and less demand? So it's really causing these numbers to fluctuate, and which is why the Fed is using this word transitory. Okay, it's because they're trying to figure that out. We haven't had this happen before. Okay, and so they're trying to figure it out. And rather than say, hey, we're a new territory, they're just saying, hey, we're going to use fancy words. Okay, and this is detrimental because now we have the government talking about doing more shutdowns and so on and so forth, which we haven't even seen the end result of the previous one. So it's causing a lot of issues, including to the IRS and collecting tax revenue, which means that the government has to print more money or borrow more money. There's a lot of issues that are that affect this. So you can keep going down and look down at the bottom, and this article will be attached in the comment section. The jobs, employers are offering signing bonuses because there's over 10.1 million job openings. Okay, people, when you talk to businesses across the industries, they're having a tough time finding people, and the people that they're finding aren't necessarily skilled in those areas, but they still need the people. And so we're having a big issue, and the government giving people checks and not encouraging people to go to work and actually earning money is causing some issues as well. So like I mentioned before, people have money, so they're still using the supply chain. They're still buying goods and services, but they're not, as a worker, in the supply chain supporting it. So we have some issues here. Are these issues that are going to affect all aspects of our economy? Absolutely, right? Everything we all do affects the economy some way, somehow. But the key is that we want to make sure that we're understanding as a business owner, what do we need to focus on? We need to focus on our cash flow. What are areas of our cash flow? Sure, it's employees. Sure, it's cost of goods, taxes, insurances. We need to affect and understand our cash flow and how to control our cash flow, especially areas that we normally don't have control over, such as insurance or even taxation. So these are important areas and aspects of our business. So anyways, if you aren't subscribed, go ahead and hit the subscribe button, hit the little bell so you get updates. As you can tell, sometimes I just ramble. But at the end of the day, we want to make sure we understand some of these numbers that are being talked about. And sometimes they do raise more questions than answers. And to us, that's just as important as getting an answer, because if it's raising more questions, that means that there's more information that needs to be had, and where do I get that? And so we're trying as best as we can to provide as many answers as we can, but yes, there are going to be moments where we are going to raise more questions, because that's all that we can do, is the answer is going to be another question. So reach out, go ahead and give us a thumbs up, add some comments and thoughts to this video. Feel free to share it with anybody else. My name is Robert Wolf with Terra Firma Business and Financial Consultants. I'm an asset coach and tax strategist. Thanks so much.